So let's get rolling. I want to start here with the pound yen, right? Pound yen is probably the most appetizing trade that's on my radar for today because it has one of my favorite patterns. It essentially has an ascending triangle setting up, but we're going to start in the daily and we'll work our way down. So daily chart pound yen, you can see that we're at a structure swap zone. We're at one of those ice zones. If you guys are new to kind of what that is, those are previous levels of support that have turned into resistance. So price action came down, slammed off or created a VS1 level, went back up, came halfway down, not exactly halfway down, or this would have been a bat pattern, but a little less than halfway down, came back up. We blew through this inside level of structure here. And now we came back up, and where are we currently holding at, guys? That same level of structure. So a previous level of structure support was broken and now has acted for a few times now resistance. So this is going to be a key decision point in the market. And I would ask you guys this question. If price action were to violate this level, right? This goes all far. We had some beautiful IPDE discussions yesterday in the Q&A about regular IPDE, saving energy, finding secret things, and also IPDE when it comes to kind of mechanical systems trading. But if price action were to go up, where do you think we'd likely to go to next? What would you guys say? $153. That's going to be, shift this line up here. 153 even. I'm lagging a little bit today. At the double top, yeah. Somewhere around this level, right? If you want to be super safe, again, you get the 153 even handle. If you want to be super safe, right, we can look at this zone right here. This little bit of consolidation on the second part of the top, right? So we keep that in mind. Again, if you remember yesterday's conversation, if you remember IPDE in general, it's all about kind of first is we're not just going into the markets looking for trading opportunities. How can I trade? How can I trade? How can I trade? We're simply analyzing the markets. We're making predictions. And if we do that correctly, the trading opportunities should show themselves. So right now you can look at this and say, okay, well, if we break here, violate here, 150s, we can go to 152.50s, 153, and then you're asking yourself the question, is there an opportunity in there? And that the answer is going to be different for different people. Some of you guys are going to be like, yeah. Some of you guys will be like, no. It depends on available profitability, trading style, all that stuff. But the key is you want to make that prediction, and we want to do our kind of dive into our trading a little bit later. So let's dive in to the lower time frame here on the 4-hour chart. And what do you guys see on the 4-hour chart? A few things here. This is what makes the market tricky. The other day we had a good conversation here in the live room about progressing as a trader, right? I forgot who we were talking to, but I was sharing the story of Cody and his amazing story, how Cody's funded and all this fun stuff, but how Cody has spent before that, he spent basically 2 years in the live room. And the benefits of the live room in any live trading environment, not just this live room, but any live trading environment, is that you get to see stuff in a little bit of a different light than it is in a textbook or is in the training course, right? That's why we always say you can't learn from courses. Textbooks and courses tend to show you the picture perfect example, right? Sometimes that's just because people want to get their point across, right? You have some authors out there or some coaches out there that just want to show the perfect setup because it makes it look like they're a genius. But also from a teaching perspective, I'm not sure if it's beneficial initially to show people a very sloppy example because it's going to be very hard for you to learn, right? Does that make sense? If you're learning for the first time and I'm like, hey, Joachim, I'm going to show you this example of the Head and Shoulders, and you're like, I can't even see it. It's going to be pretty hard for you to learn. It's a little bit easier to show kind of a clean example, and then as you get more experience, train your eyes to identify the more difficult ones. So it's not always their fault. It's an interesting balance if you're going to be teaching, but there are some people out there that are just like, I'm just going to show the picture perfect one, so it proves that my system and strategy works all the time, so I'll sell more books or whatever it is. So this is interesting. You have one or two head and shoulders, depending on how you're looking at it, head and shoulders bottoms. And I'll tell you why it doesn't really matter, right? So you can look at this right here being the universal left shoulder. This is going to be the universal head. Now, depending on how and when you identified this, right? This could be the right shoulder, right? With a slanted neckline. Am I right here, guys? This was the break and the retest. Or maybe if you're late to the party, you're ignoring it and you're just saying, you know what? This right here is the right shoulder. And the break and the retest. So depending on when and how you identified it, it may change, and that's going to be the difficult part about trading. For me, it doesn't really make too much of a difference at this point, because the only thing that matters for me, and this is what we talked about in the foundation too, where you can kind of like simplify all the funny stuff you can do in trading and just focus on that the market only moves in three ways, right? So what matters to me most important, whether this is a new head and shoulders and old head and shoulders, is the break of this zone. All I care about is the break of these highs. All right, so all that other stuff doesn't matter for me. We also have what is one of my favorite simple patterns to trade. Someone mentioned a wedge earlier. It's not just a wedge. It's in the wedge family, but it's a little bit more specific. An ascending triangle, right? We have price action hitting the highs. Uno, dos, tres, right? We've got two lows at the bottom, right? Higher lows equal highs, right? This is a prime breakout pattern in my opinion. And this one specifically, the probabilities are that we're going to break out to the upside. Again, I always think about it, building momentum. I say this all the time. I used to have the exact opposite approach with trading, with where my mindset, and this was developed by the internet, I'm sure, was that the more times a level of structure is hit, the more important it is. So you get stuff like that, and I'd be screaming out, triple top. It's got a short, right? Because the buyers can't push past that level. The sellers are so strong at those highs that the buyers tried 3 times and couldn't get past. And just experiencing the market, and as I kind of went out on my own and learned different things, my opinion changed, right? Whatever I had learned, because unconscious incompetence, when you're new and you're a sponge, you don't know any better. So the first thing you hear, you just believe, and it makes sense, right? The more time it was hit 3 times and hasn't broken, that it should be strong, right? Picturing yourself kind of trying to kick through a door. We've been watching The Purge lately a lot, so there's a lot of door kicking and breaking and entering and stuff like that. But kicking through the door, you just can't get past, and eventually you give up, right? That's kind of the mindset. The truth is, the more you kick the door, right? Depending on the door, let's say a regular wooden door, is that door getting stronger or weaker? Well, that door is getting weaker, right? So it's only a matter of time before it gives, right? And this ascending triangle pattern is the same way, where the highs are being tested and the highs are holding. But if you look at the other side of the party, the sellers are having an issue pushing it back down. And in fact, when they push it down, it's getting weaker and weaker each time. So again, put yourself in a situation as a buyer. If you're a seller in this situation, and each time you sell it, you're getting less and less action, and you keep coming back and selling it, are you gaining more confidence or losing confidence in your position? If every time Raymond sells, it moves less and less in his direction, he's probably saying, you know what, probably not the right place. I'll live and fight another day, right? We also know that Raymond's probably got a stop loss right up here if you're selling. So we see that breakout, the sellers, their buy stops are triggered. We see a lot of momentum to the upside. So I would expect a bullish breakout here. And again, we already did kind of the hard work earlier, right? We predicted a zone earlier before we were even thinking about a trade, so we know where to look for targets at. Now the question is that the side part. How can you enter? Are you a breakout trader that could put a buy stop right above and get involved during the breakout? Are you a breakout trader that needs a break and close, a confirmed breakout, to buy it up? Are you someone that needs a pullback? Are you someone that can go down to a lower time frame and build a position now prior to the breakout? We'll look at that in a little bit. But this is where you refer to your trading plan, and now you have to look for your specific style and how you trade to see if you can take advantage of the opportunity. Does that make sense, guys? Did I lose the new ones? Sorry. Akil, it's my first day. I'm sorry. A few other things we can do to kind of narrow down that area of target. Again, we can take 1-to-1 measured move. Copy and paste that. We're going to see, boom, that's right up there in that zone. What else can we add with that, guys? What goes hand in hand with an AB equals CD or 1-to-1 measured move? Fibonacci extension. Yeah, Fibonacci extension. Swing low to swing high. Don't you love how repetitive this is? I know you guys know the answer, but that's the point. Right, see if there's any fib confluence. Not really. We have a 1618 up there. Right above 153. I wouldn't get above 153. You guys know how I feel about those psychological levels. You're probably going to have a 1618 inversion here. That's going to be I guess you can look at that as a conservative target if we can take the Fibonacci extension and invert it from this previous swing low. So swing low to swing high, right to left instead of left to right, and back down, right? So I would say this, conservative targets right up here between this 127 and that 1618 inversion. Super aggressive targets at 153, and then regular targets, I guess you can say anywhere 152, 50s is going to be a solid level. Any questions about this? We're going to go down to a lower time frame, see about if there's any way to enter before the breakout. But I want to get this into our pro trade log first. In the meantime, if you have any questions, type it in while I'm typing it in.